Okay, let's jump into this week's sources. It really feels like we're straddling two different realities, doesn't it?
Absolutely. On one hand, you've got this incredible tech acceleration. I mean, AI chips are just booming.
Right, changing biology, mobility, but then you look at the other side, and it's like grinding gears, political deadlock, systems under stress.
Yeah, just stuck. And you see that tension reflected right in the markets.
Yep.
They seem almost disconnected from the policy chaos sometimes.
Totally, all-time highs again. S&P 500 hit 6,900 intraday. NASDAQ, Dow, new records.
And what's fueling it? It seems to be mostly that pure, unadulterated faith in AI. Plus, everyone's holding their breath for those big tech earnings this week. Amazon, Apple, the usual suspects.
So that's our mission for this deep dive. We need to really unpack these conflicting signals, look at where the future is actually being built, those chip factories, and where the old structures are
With
cracking.
the regional banks, the shutdown fallout. Yeah.
Exactly. Let's start with the acceleration point,
Ah.
the silicon itself.
Okay. Well, Nvidia is still king of the hill, no doubt. Their GTC conference just dropped some major news.
The Blackwell GPUs.
Yeah, Jensen Huang confirmed. Fastest AI chips ever, and they're now in full production.
And the really interesting part, I thought, was where they're being produced.
Right, Arizona. He specifically mentioned this domestic shift, even moving assembly for the whole systems here, was actually requested by President Trump about 9 months back.
So it's national security, it's jobs, it's making the AI infrastructure a strategic national asset, basically.
Precisely, it's a huge economic signal. And, when one company dominates like that,
Competition heats up.
exactly. Yeah. Right on cue, Qualcomm announces they're jumping in with new AI accelerator chips. They're gunning for Nvidia's data center business.
Makes sense. It's not just about the chips themselves, though, is it? It's what they enable.
That's the key. Look at healthcare. Eli Lilly and Nvidia just announced this massive partnership.
To build a supercomputer for pharma, an AI factory.
Yeah, they're calling it the industry's most powerful. Over 1,000 of those new Blackwell Ultra GPUs packed in there.
The goal being faster drug discovery.
Revolutionary speed, potentially. Slashing years off that typical decade-long slog to get new medicines developed.
Wow. Okay, but how quickly does that actually pay off? Our sources seemed a bit cautious on the timeline.
That's the crucial context, yeah. Supercomputer itself should be built by December. But Eli Lilly is saying, look, don't expect major business returns from this AI factory until maybe 2030?
So the tech is fast, but plugging it into a complex, regulated industry like pharma, that takes time. Serious long-term investment.
Right. And you see similar patterns elsewhere, like in mobility.
Lucid Group, pushing for that level 4 self-driving.
Yeah, they won't be the first with consumer-ready, mind-off driving. They're using Nvidia's Drive AV platform, tons of sensors, cameras, radar, LiDAR, the works.
For their new midsize car, right. But are they actually committing to a launch date for the driving capability?
Not for 2026, explicitly. I think they've seen how hard true level 4 autonomy is.
Oh.
The car might launch, but the full self-driving feature, TBD, it's still a huge technical challenge.
Okay, so you have all these powerful AI tools emerging for drugs, for cars, for coding, and developers are now kind of drowning in options.
It's becoming a management nightmare, yeah. Which is where GitHub's new thing, Agent HQ, comes in.
Ah, like a mission control center for coding bots.
Pretty much. Lets developers manage and monitor agents from all the big players, GitHub, OpenAI, Google, Anthropic, xAI, Cognition, all in one spot. Sort of taming the chaos,
It's needed.
Yeah.
But this explosion of AI capability leads to their other debate we saw, the creativity question.
Right. Can AI actually create something new, like the next Grand Theft Auto? Strauss Zelnick from Take-Two has some strong thoughts.
He basically said no, right, because it's all based on existing data.
Exactly. He argued it's inherently backward-looking. By definition, data-driven means derivative, not truly novel creativity in his view.
But you can argue all human creation builds on what came before, couldn't you? I mean, where's the line?
That's the philosophical rabbit hole. But for Zelnick, the practical, commercial problem is intellectual property.
Ah, right. He said AI-generated stuff isn't protectable IP.
Not currently. So if your Take-Two built on these massive proprietary franchises and the cool stuff your AI generates can't be legally owned, that's a huge business constraint. The law hasn't kept pace.
And making all this AI work, whether it's creative or not, takes massive amounts of power, which brings us to the infrastructure crunch.
Oh yeah, the fight for data center capacity and the electricity to run them is getting intense.
And this is where we saw that really surprising story this week.
The Bitcoin miner beating Microsoft. CleanSpark.
Yeah.
I
How
don't
does
know.
that even happen? A crypto company snags a 100-megawatt site in Wyoming over a tech titan like Microsoft?
The speed and existing assets. CleanSpark's CEO basically said, we can get a facility up and running in 6 months.
Compared
3 to 6 years for a traditional AI data center developer, starting from scratch. They need land, permits, substations.
So the Bitcoin miners already have all that, the land, the power connections.
Much of it, yeah. They own access to land, substations, electricity contracts. It's a massive head start.
So the takeaway isn't just speed, it's that this infrastructure, maybe once seen as competing for power, is now actually enabling the AI build-out,
Exactly. And they offer something else crucial, grid flexibility.
meaning they can power down quickly if needed.
Right. They're designed to curtail load during peak demand, helping stabilize the grid. Most big AI data centers can't just switch off like that. It makes miners incredibly valuable partners right now, especially with power grids already strained.
Okay, that infrastructure ties directly into finance, doesn't it? Building all this requires huge investment, and the cost of that money depends on the Fed, who are meeting this week.
Yep. And the market seems pretty convinced about what's coming. Our sources suggest it's almost 100% probability they'll cut rates again.
Another 25 basis points, taking the target range down to, what, 4 to 4.25%?
That seems to be the consensus, yeah. The real drama isn't if they cut, it's about the signals for the future. How many more cuts, and when do they stop shrinking their balance sheet, the quantitative tightening or QT?
And making those calls is extra hard right now because of
The government shutdown. Still, they're missing a lot of the usual economic data. It's like flying partially blind when trying to chart monetary policy. Makes forecasting inflation and growth much harder.
We also saw some movement in safe havens, like gold.
Yeah, gold prices dipped to a 3-week low. It had popped above $4,000 an ounce briefly, but then fell back. Seems like hopes for some progress in the U.S. China trade talks maybe ease some tension.
Ahead of that Trump-Xi meeting scheduled for Thursday, less geopolitical stress, maybe less need for gold as a hedge right now.
Meanwhile, shifting gears to banking. That sector's had a pretty quiet time from activists since the '08 crisis, right?
Until now, it seems. This activist hedge fund, HoldCo Asset Management, led by some younger guys.
Yeah, Vika Guy and Misha Zaitsev. Millennial upstarts, shaking things up. They're targeting underperforming regional banks.
And they already had a big win with Comerica.
Forced them into a nearly $11 billion sale. Their argument is pretty sharp.
What's the core thesis?
They basically argue bank CEOs chase mergers, even bad ones, because it bumps up their own paychecks, often at the expense of shareholders whose stock then tanks.
And HoldCo isn't just writing letters, they're going public, launching proxy fights.
Exactly. Public shaming, proxy battles. They're targeting Eastern Bank, First Interstate, planning a fight at Columbia Bank, and bought a big chunk of Bank United too. It feels like the post-crisis truce for regional bank boards is definitely over.
Which brings us back full circle to that institutional friction the government shut down, now week 4.
And the real-world pain is becoming acute. This isn't just political theater anymore.
The air travel situation sounds critical. Air traffic controllers missed their first full paycheck.
Yeah. And Transportation Secretary Duffy said delays caused by staffing shortages hit 44% on Sunday. Think about that, up from a typical 5%.
That's enormous. And the stress controllers reportedly taking second jobs like ride-hailing just to pay bills while guiding planes. That's scary.
It really is. And on the humanitarian side, the legal fights are escalating over the SNAP food benefits.
Over 24 states suing the administration because funding is set to stop November 4th. That affects, what, 40 million people?
Over 40 million Americans, yeah.
Yeah.
And separately, a judge blocked the administration, at least temporarily, from actually firing thousands of federal workers during the shutdown.
Those reduction in force notices, unions like AFSCME obviously praise that. Mass firings during this kind of chaos would be, well, unthinkable.
Yeah, just add fuel to the fire. Finally, we saw a really interesting strategic shift from Bill Gates on climate change this week.
In that letter he published, he seemed to be pivoting his focus a bit.
He did. He argued that maybe too many resources are narrowly focused just on cutting emissions.
And he wants to redirect more towards improving lives directly. Disease, poverty.
Right. Framing climate action within that broader context of overall human welfare. He even called the original Paris goal, limiting warming to 1.5 degrees Celsius, unrealistic.
That's a significant reframing from someone like him, a more pragmatic, maybe, approach.
Looks like it. Acknowledging the difficulty and focusing on adaptation and broader well-being, alongside mitigation.
Okay, so wrapping this all up, the tension this week is just so clear. You have this incredible momentum in technology AI chips driving markets to record highs.
Butting right up against these deep institutional problems, banking structures under fire, political gridlock causing real human harm. It's a real push and pull.
Which leaves us with a final thought for you, the listener. We've seen how essential these AI chips are becoming, powering everything from new medicines to maybe eventually self-driving cars.
But that progress comes with this enormous energy cost. The demand for power is so huge, it's forcing these strange partnerships, like we saw between a Bitcoin miner and an AI developer, just to get the infrastructure built.
So the question to ponder is, as this race to build out the energy infrastructure for AI accelerates, how will it ultimately redefine the cost, both the financial cost and the environmental cost of this AI future we're rushing into?
Yeah, what does the grid of the future look like, and what compromises will we make to power it? Something to definitely keep watching.